Hello and welcome to another update video about oil. Yeah, we take a look at oil, light crude oil futures, and the chart overall hasn't really moved. I mean, it's just sideways. Of course, there is some significant volatility on an intraday basis, short-term basis, but you can see it on this chart that this volatility is decreasing as we're heading into the apex of something that looks a little bit like a triangle pattern here. That's not so relevant from an Elliott wave point of view, but still it is a pattern that indicates somehow indecision. That's why there is a bullish and a bearish count, and they really have very similar probabilities, I have to say. So let's talk about what this means. As you can see, we're just moving sideways. So for many months, it's just been moving sideways. There is a pathway higher, which I actually slightly prefer. In this scenario, we are filling in a larger B-wave corrective rally into the $100 region before likely a larger decline is starting. In this scenario, we have a 1-2 setup in wave C of B. And the third wave could be unfolding. But because we're dealing with an ending diagonal, the third wave would be an ABC structure. A, B, and the C wave to the upside to come. And that's sort of what we could be working on right now. That's the bullish count. In a short-term bearish scenario, we would move down lower as per the white scenario. In this case, we could explore if this wave B is still unfolding, the B wave that likely bottomed in December 23, but that doesn't matter in the short term. In the short term, I think it's crucial to understand that there could be a pathway down in 5 waves from here. Yeah, and this would be short-term bearish. So how can we distinguish? It's difficult because at the moment, I mean, as you can clearly see, really balanced probabilities. I just, because of the context, slightly prefer the pathway higher, but it will depend on a few confirmations. For example, for the white scenario to remain relevant, we need to hold below, well, minimally, I mean, ideally, I'd say for the white count, below the 27th of August high, so below $77.61, and then below $79 if that level is broken to the upside. A break above 79, which is, I think it's the August high, would clearly favor the yellow scenario in which we're moving higher. So I would pay attention to that. There's also a very nice trend line here, really nice trend line for a possible breakout trade. Again, not telling you to do that, but we have 1, 2, 3, 4 touch points, maybe 5. Here, this red descending trend line. And to the downside, we also have a trend line. It's not that well defined, but also 3 touch points in green here. And a break to the downside could confirm the white count, which would be confirmed obviously with a break below $71.60. So if we then look at the yellow wave count, I mean, again, I'm tracking also this move up as a diagonal, and I've really run out of wave degrees, but we've got from this B wave low early in August, a wave 1 to the upside, only in 3 waves, which means, look, we have 3 waves down, 3 waves up. It doesn't give us clear probabilities, but this could be a wave 2 from the higher low, and then this could be an AB, and then this could be a C wave, again in wave 3. So you see, this is very messy. I think it is important to be aware of the relevant breakout points, these trend lines. And it's important to be aware that at the moment the market hasn't really made a decision yet, but we're at an important juncture, and I think the next moves, which might take place in the next 1 or 2 weeks, could really set the stage for the moves in the oil markets in the next few months to come. So I'm definitely going to watch for an upside breakout here. But even if it goes down, I mean, the pathway is there. It would then likely send us into the low $60 region over the coming months. But again, it would require a break below $71.50. There's no way of saying which direction it's going to go. It's just a sideways triangle. Indecision. The market hasn't fully made up its mind yet. And I think it would still look best here, this B wave with this pathway up. But again, it is very balanced. If we zoom out a little bit, you can see that. Let me go to the daily chart. My thesis is that a larger A wave topped in 22. This is then of a larger B wave, an A wave down, which bottomed in May 23. I'm watching for a B wave rally now, and then a C wave down. I mean, could that B wave be a triangle? Yeah, I mean, then it would have topped here. And that would be the white pathway, the white wave count. So going back to the 1 hour chart, or let's go to the 4 hour, where I could easily say the triangle already topped here. And then it's a triangle pattern where we've topped, obviously, you know, and then there are different ways that this pathway could, or the market could take easily. But the problem is there is an absence of 5-wave patterns, and it's just important to be aware of the key pivots, key levels. So for me personally, I'd be interested in a long trade with a break above the red trend line. And I might even be interested in a short trade with a break below the green trend line, even though I find the red trend line more defined. And there are pathways for both scenarios. So it's just essentially about being prepared, I think, and about understanding that at the moment the market, as long as we are sort of moving here in this triangle pattern, there is no decision just yet. Unfortunately, with an absence of 5-wave patterns, there isn't a clear idea of the short-term trend. So that's the update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.